Moving on to Nigeria, the market started the week on a pretty good note. The NSE All-Share Index up about 0.9%, closing at 32,243 points, led higher by the cement sector. We saw the likes of Ashaka Cement and Dangote Cement moving higher yesterday. So some investor interest flowing into the cement sector after the rally we've seen in the consumer stocks. But for the fixed income market, it's all about the MPC and inflation. Yesterday, we saw the inflation numbers out at 9.5%, and we did see bond yields react. Let's now speak to Sam Ocheho to give his thoughts on that. Sam Ocheho is Regional Head of Trading at Stanbic IBTC. Thank you so much for joining us, Sam. And like I did mention, we did see some reaction on the fixed income side to that inflation number. Before we move on to the MPC and what your expectations are, just talk us through the yield curve and how that is trading right now.
Morning, Wole. Yesterday, what we witnessed in the fixed income market, we saw yields rallying northward across the curve. From the 1-year to the 20-year curve, we saw yields rallying, and all the yields across the curve actually moved up. And one of the reasons we can adduce to this is the panic sell by locals. Most market players are of the impression that a lot of offshore are exiting the fixed income market. But from the market feeling and what we have been seeing, we don't think that is the case. Yes, you have a few of them doing some trade, but I don't think on a general note you want to say the offshore are the one exiting the market. What we've seen mostly is panic sell by the local players in the market. And again, one other thing that has assisted in rallying the yield upward is because of the OMO activities we've seen by the central bank. You will have witnessed that there are lots of liquidity in the system.
Of course,
about 247 billion matured into the system last week. This week, on the 21st of March, to be specific, we expect another 257 billion to mature. There's also FAC coming in this week. So the system is going to be awash with liquidity. And one of the tools available to the central bank is the OMO tool. So we expect to see more of these OMO activities. And the truth is yields have been rallying up in the OMO sector, and that has also caused the market yields to rally up. So if the short end is rallying up, you expect people to sell off on, do a lot of risk off on the long end of the curve. And that's what we've been seeing in recent times.
Okay, you make a very important point, and I want to get your thoughts because I know Stanbic IBTC trades quite actively with foreign investors. What exactly is happening there? I think it's a good point to focus on. I imagine this is something that the MPC will also be talking about today, the interest of foreign investors in our bond market, which of course has provided a lot of support for the Naira because of the effects that they bring into the market. What is the dynamic that you are witnessing right now in that respect?
Well, if I take you back to August when the announcement of Nigeria and the JP Morgan index was made, we saw a lot of interest from the offshore client. That actually opened us to the whole world. Right. We saw people from Europe, America coming into the Nigerian market, participating in our sovereign yields, and that really assisted in rallying the market, depressed the yield, and yield came at some point even up to single digit. Right. But what has happened in recent time is there's reduced interest. Some of them, they are already overweight Nigeria, and except they get new monies, you might not really see most of them coming in to increase their weighting. But what we've seen, the yields, when it went down to 10%, people started, the participation from offshore started reducing. And right now, the participation from the offshore is not as much as it used to be. And so what has happened? That has triggered into the Nigerian market and local market players, because we're not seeing yields rallying the way it used to rally. Most of us who were already limit long had to start selling off. And that is why you're seeing yields rallied back to the 11.4%, 11.5% you're currently seeing it. So, but it's not as if they've actually exited. What you've seen is reduced interest from the offshore, from an offshore perspective.
Okay, of course, one thing that could stimulate even more interest is the introduction of Nigeria into the Barclays index. Many people say perhaps the impact will not be as significant as the JP Morgan index inclusion. But your thoughts on how that is likely to impact the level of demand from the foreign investors?
Well, I will expect to see some new clients who are tracking the Barclays index coming into Nigeria. But if you look at it on a wider note, it's not as widely tracked as the JP Morgan interest and index. And I think the Barclays index has more of corporate as opposed to the sovereign in terms of the emerging market. So you find out that we don't expect significant change the way the JP Morgan changed them. I don't think there's going to be anything significant. If there was going to be anything significant, we should have started seeing it by now, because they've already announced the bonds, about 11 bonds that are going to be included in the index, right. And yet the yields are still going up. So that gives you a feeler that the people tracking, the trackers of this index is not as wide as that of JP Morgan. Okay. So I don't expect anything major from what it is currently. It's only new flows to this fund that will really change the dynamics of the market.
Right, so if we're going to see the impact, we should have seen it already. Let's move on to the exchange rate. The exchange rate, of course, has been moderately volatile recently. I want to get your thoughts on the reasons for that. I imagine that's something else the MPC will be focusing on today.
The phone has cut off.
Hello, Sam? All right, unfortunately, we seem to have lost Sam there. Hopefully, we'll get him back in a little bit, but I was just trying to make the point that the Naira has been recently volatile. We saw it recently coming fairly stronger because of the central bank's intervention on Friday. It almost tested 160 Naira to the US dollar, but now it's only trading at 158.65, again because of that central bank intervention. And I think a big reason for that is that the flows from the foreign investors is not at the level that it used to be at. Let's see if we can get Sam back on the line. Sam, are you with us now? Okay, Sam, I was just going to try and make the point about your thoughts on the Naira and why the Naira is weak right now and where you see it headed.
Okay, in the recent week, we've seen the Naira growing weaker against the United States dollars. As a close of business yesterday, the market closed at 58.60 on the bid and 58.70 on the offer. But we saw intraday high of about 159.40. If you ask me, the reason why we are seeing this depreciation of the currency is more a supply side issue. I'd already alluded to the fact that we're seeing reduced interest from the offshore. They have been the major support for the currency where it is right now. With all the flows we've seen in Nigeria, you've seen them paying via FX, and that has really supported the currency. Hence, the demand at the WDAS window has reduced. Hence, the Naira has been able to gain support at this level. But with their reduced interest, the usual demand that has been in the market all this while that has been taken up by this offshore flow, I now have to find their way into the interbank market and the WDAS market. Hence, you're beginning to see some pressure on the Naira. Okay. That's why we're seeing things at around 159.4 levels. But the truth is the central bank has demonstrated ability and capability to be able to sustain the currency. And that's why we've seen it at 58.60-70 as a close of business yesterday.
All right, no doubt the central bank has demonstrated that ability, but just like you mentioned, if we don't see the foreign investors coming to the table like they used to, at what point do you think that they may want to shift the goalpost a little bit and maybe start thinking about maybe 160 is the natural place for the Naira to trade at?
Well, the simple truth is if the interest of the offshore is not sustained and it is reduced significantly, then 160 threshold will be easy to break. That barrier would not be difficult to break, except the central bank commit enough resources into ensuring that we stay below the 160 level. Well,
we'll see what they do today. Thank you so much, Sam, for joining us. Sam is the Regional Head of Trading at Stanbic IBTC, giving us very interesting perspective about the dynamics that the MPC will be considering today.